Good day, and welcome to today's Thermal Energy Webcast as part of the Planet MicroCap Showcase. It is now my pleasure to turn the floor over to your host, William Crossland, President and CEO of Thermal Energy.
Thank you very much, and welcome everybody. Thank you for taking some time out of your day to hear the Thermal Energy International story. Thermal Energy International operates in the energy efficiency and carbon emission reduction business. And we are a proven, profitable, sustainable growth story with a compelling valuation. And I'm going to tell you all about that now. So standard forward-looking statements. So just quickly to sum up, we're in a fast-growing global market with very strong fundamentals. You know, the market for carbon emission reduction and energy efficiency has been strong and growing for the last several years. It really started to take off with the Paris Agreement several years ago. But more recently, as a result of the global pandemic, it's really strengthened even further. There's almost a universal Build Back Better approach being adopted by virtually every country in the world. Almost every country and most of our customers and most multinational large companies have adopted new aggressive carbon emission reduction targets. We'll talk a little bit more about that. As I mentioned, we're an established company with a proven track record of growth and profitability. We've got an extensive multinational client base, list of multinational clients, and we've got a 5-year, over 30% compound annual growth rate on revenue and profitable. And despite the strong market and despite the proven performance and profitability, we are still trading at about a 1.5 times revenue. Next slide. So, to talk a little bit about the market. I mentioned the carbon emission reduction market and the energy efficiency market has been quite strong for the last several years, but it has really, I can't emphasize enough how much stronger the market has got in the last 12 months. And that's coming from a lot of different areas. First of all, back in January, BlackRock, the world's largest asset manager, or I imagine many of you might be familiar with, in their annual letter, they announced that they want to see their investee companies disclose more and do more on greenhouse gas emissions. And that very same day, there was a letter issued by 60 major multinational companies saying they would indeed do that. They were going to adopt more stringent ESG metrics. So there's increasing investor demand for ESG. In the U.S., you know, one of our largest single market, there's been sort of a total change in the focus on climate change. The new administration in the U.S. has said that climate change will be at the center of every policy, not just environmental policy, not just economic policy, but all foreign policy, all domestic policy, all security policies. Climate change will be at the center. Then you've got, you know, many of the countries in the world focusing on a Build Back Better approach with respect to the pandemic. We've seen that over and over again. And as I said, many companies and many countries have increased just recently, sort of doubled down on their carbon emission reduction targets. So back in December, the UK increased their carbon emission reduction target from 40% to 68% by 2030. Just a day or so ago, they announced they were going to get to 78% by 2035. Europe increased from 40% to 55% by 2030. A number of companies, PepsiCo as an example, back in January announced they were going to reduce their carbon emissions by 75% by 2030. So strong demand from all sectors. This next slide just sort of shows a little bit about the size of the market. So it's a great slide. If you're an energy nerd like me, it's pretty much all you need to know to see. It tells you everything you need to know about the sources, uses, and flows of energy in the U.S. economy, and most industrialized economies would be very similar. You can see all the energy sources in the different colors on the left-hand side. They then flow through the economy. The orange is electricity, and pretty much everything, every other color is some form of heat energy or thermal energy, and that's what we focus on, thermal energy efficiency. And out on the right-hand side, you see this big box called rejected energy. Rejected energy is the energy that's been lost somewhere in the system due to inefficiencies. So you can see that the U.S. economy only uses about a third of the energy. So they lose 2/3 of the energy they use, they lost somewhere due to inefficiency. And it was this huge opportunity represented by energy efficiency that resulted in the International Energy Agency declaring energy efficiency the world's first fuel. There's a couple things they wanted people to focus on by calling it the world's first fuel. First of all, they wanted people to realize that when you see that gray box, you realize that the opportunity represented by energy efficiency is greater than every other fuel source. And the second thing, if you need more energy, the first place they want you to look is energy efficiency. And the beauty of energy efficiency, it's a low-hanging fruit, because not only does it reduce carbon emissions, it's far cheaper than any other carbon emission reduction solution. So not only does it reduce emissions, it also saves you money. It doesn't cost money, it saves money, and can have a much greater impact than renewable energy. The area that we focus on, excuse me, is industrial thermal energy efficiency. So that's the pink box there we've highlighted in blue. And the reason for that is, that's where you get large energy-intensive industrial sites. So if they're using a lot of energy, we can save them a lot of energy and do nice big projects for them. You can also see that 88% of industrial energy use is thermal. That's our focus. And that the industrial market is 2 times bigger than the residential and commercial market combined. Next slide. So how do we do this? We essentially design, engineer, and deliver industrial thermal energy efficiency solutions for our customers, working in partnership with our customers, using our own suite of proprietary products, which you see down the right-hand side. So Fluace, GEM, Steam Traps, Heat Sponge, Dryrex, Sidekick. We deliver projects with about a 2 to 4 year payback for our customers, so we're adding real value. These are projects that they will last as long as the plant is in operation, essentially. They're built to last. So easily last 30 plus years. So when you've got a project that has a 30-year life and a payback in 2 to 4 years, you can see it's a very compelling ROI for our customers. 70% of our business is a turnkey solution where we deliver the project and install it complete for the customer. Those projects tend to be about $500,000 to $2 million. But we also do what we call major equipment or customized equipment packages, again, based on our technology. If the customer wants to install it themselves, that's about 30% of our revenue, and those orders are sort of $10,000 to $500,000. And the other important thing is we rarely compete. We're not a bid to spec company. We are working in partnership with our customers, so it is very rare that we're actually competing with someone else for price. How do we do this? So we've got a global footprint. Our the key markets strategically that we're focusing on, North America and Europe. So you can see we've got corporate offices in Canada, United States, and the UK. And we've got sales offices in 7 countries and growing. But the focus is North America and Europe. But we have completed hundreds of projects all over the world and actually in 30 different countries. We've really focused on our key customers. So if our key customers have a project they want to do for us outside of our key markets, we're more than happy to do it for them. Let's see. Okay. This is just to give you a sort of a snapshot of the typical customer and the typical sector, the typical projects. As I mentioned, we focus on very large multinational customers. As I mentioned, that's because they have the large energy-intensive sites where we can do nice big projects, but they also have hundreds of sites worldwide. And so, once we've convinced them at one site, it's much easier to do site after site after site. The bar across the bottom gives an example of our recent orders. And there's a couple of things I'd like to highlight there. You can see the variety of sectors. We do projects and have done projects in almost every sector you could possibly imagine. But 80% of our business tends to be in non-cyclical sectors such as food and beverage, hospitals, and pharmaceutical. So when you go across from left to right, you can see the first company was, a food canning company. The next was a hospital, then a tissue company, then a dairy, a brewer, snack food, tires, pet food, chemical, and food ingredients. So a real variety of sector and a variety of customer. You can see the projects average from about $500,000 to $2.5 million. You can see the payback ranges, sort of 2 to 4 years. And you can see the location is diversified by Europe and North America. Excuse me. So we have been executing. I mentioned we're a proven, profitable, sustainable growth story because we have been executing our strategic growth plan for the last several years, and it really has 3 main pillars. The first is leveraging our existing high-quality customer base. I do often say to our sales team, we don't need any new customers. We just need to sell more to the customers we have, which is true. But of course, I always am happy to get new customers as well. But in 2020, about 80% of our revenue was from repeat orders from existing customers. The second thing we want to do is gradually increase our product portfolio, again, so that once we've sold a customer one product or one project, we can then sell them, cross-sell another one. Our portfolio now, as I mentioned, consists of Flu-Ace, Gem, Heat Sponge, Sidekick. And the final thing we want to do is grow our team and global presence. So over the last couple of years, we've added 2 people in Germany, somebody in Poland, 1 in the U.S. Gulf Coast to focus on the oil and gas, and 1 in Latin America. And we want to do all of this both organically and through acquisitions. And we have done it both organically and through accretive acquisitions, because in 2018, we acquired the boiler room equipment business, which gave us Heat Sponge and Sidekick, so that was an increased product range. It also added a new distribution channel for us. So what has been the outcome from this strategy? You can see here, this is the 5 years of revenue, EBITDA, and net income leading up to the LTM February 29, 2020. And of course, that's about a year old. So that's, but there's obviously a reason why I focused on that. I wanted first to show you what our results had been prior to the pandemic. And so you can see that's about a 31% compound annual growth rate on revenue. Just before the pandemic was declared in March, we were generating about $3 million in EBITDA and about $1.7 million in net income. So some phenomenal, great results. So obviously the strategic plan is working. But then, of course, the global pandemic hit, with travel restrictions, site lockdown, social distancing, all kinds of mitigation measures, and that did impact and continues to temporarily impact our ability to visit customer sites and execute projects. You can imagine if we're doing a turnkey solution, there's a lot of site visits required. So that got very difficult, particularly in the fourth quarter of last year, sort of March, April, and May, and the first quarter of this fiscal year, June, July, and August. And these COVID-19 mitigation measures, they do impact our turnkey heat recovery projects more than our major equipment when we're just selling a piece of equipment. So that has impacted it. As you can see, back in March and April of last year, it really caught the world by surprise. I don't think anybody knew what to expect. So there was, especially then, there was really widespread travel restrictions and site lockdowns. Customers weren't allowing anybody on site. And as a result, our revenue dropped by about 53% in the quarter. Interestingly, though, we were still able to finish the year, fiscal 2020, with those fourth quarter results being impacted by COVID. We were still able to finish the year with, revenue growth, almost $2 million in EBITDA, and about $1.2 million in net income if you exclude, about a $3.1 million non-cash write-down of intangible assets that we took at the time because of the uncertainty of COVID. And the other interesting thing is, although our heat recovery projects, our turnkey heat recovery solutions have been negatively impacted, revenue for our Gem product and Heat Sponge product, which don't require the same level of on-site service, they are actually up this year by about between 10 and 20%. So that's great. And you can see, despite COVID, on a year-to-date basis, for the first 9 months of fiscal 2021, we were still generating EBITDA of about $1 million and net income of $329,000. So some great results, given the challenges that all of us are dealing with right now. But the picture is even actually a little bit better than that. I wanted to highlight here, what we did here is we took the average quarterly revenue pre-COVID, which was $6.2 million. Then we said the early COVID period is when everybody was not sure how to handle it. There was a lot of uncertainty. There was a lot of restrictions. That's when revenue dropped more than 50% in Q4 and Q1. But then for Q2 and Q3, it's already starting to build back to our pre-pandemic levels. So $4.4 million in revenue. Profitability even better. You can see in the last 2 quarters, we've averaged $500,000 in EBITDA and averaged $300,000 in income, almost $300,000 in income. So some very great results more recently. We're already building back to the levels we were in pre-COVID. And it gets even better because on the order intake side, it's very encouraging. As I mentioned, our customers, there's unprecedented increased demand for our product and services now, given everyone's desire to increase their carbon emission reductions. So our year-to-date order intake is actually up 87% compared to last year. Our order backlog is 79% higher than it was at this time last year. And despite COVID and despite what we've been through, we have maintained positive cash flow. So we continue to have a very strong cash position of $4.4 million and strong working capital of $4.2 million. So to sum up, at the recent price, I actually haven't checked what it is today. We've got lots of meetings lined up. But a couple of days ago, it closed at 24 cents. That equates to a market cap of about $39 million, enterprise value of 38, because although we have a bit of debt, we have net positive cash. And so that equates, assuming the pre-COVID levels of performance, the normalized levels of performance, that's about 1.5 times revenue, 13 times EBITDA, 23 times earnings. So certainly, in my view, Thermal Energy's current valuation does not reflect, A, the proven growth and profitability that the company has delivered over the last several years, nor does it reflect the current market improvements, the significant increase in demand for carbon emission reduction and energy efficiency products. So just wrapping up finally, so just to summarize again, compelling investment opportunity. We've talked about it, fast-growing global market with strong fundamentals as a result of Build Back Better and new carbon emission reduction targets. Established company with extensive multinational client base and strong growth track records, compelling valuation at 1.5 times. So as I started the presentation, Thermal Energy International is a proven, profitable, sustainable growth story with a compelling valuation. And we do have a few minutes now to go to the question and answers. So certainly type in the questions if you have any of them. Okay, give us some information on TEN's past and forecasted workforce growth in various parts of the world. Where is it active? So our strategic focus right now, we think you saw on the map in the presentation that we have pretty good coverage in North America. We've got somebody pretty strategically placed throughout North America, and it's important for us to sell direct. So we need people on the ground. We're selling a specialized product and service, so we need people on the ground to generate those sales. So I mentioned in the last couple of years, we've added 3 people in Europe, continental Europe, because the original base of operations was the UK, and a couple of people in North America. We think we're pretty much got what we need now in North America. So our strategic focus for growth going forward is going to be Europe. Most of our European sales come from the UK. Germany is growing, but Germany is a larger market than the UK, so we have lots of growth left there. We don't have anybody in France yet. We only have one person in Italy. We don't have anybody in Spain. And then there's a lot of industrial opportunity in the Eastern European countries. So that's going to be the focus of our growth going forward. Great question. Next one, will TMG benefit from progressive governmental policies? We definitely will. And, we aren't reliant on it, but I mentioned to you that virtually every country in the world now has more aggressive targets to reduce carbon emissions. And they all do it different ways. And so our salespeople have to sort of keep tabs on what's going on in their local markets. But with the governments having that target, that means there's going to be certain programs that are put in place, whether they be funding models, whether it's a price on carbon, whether it's a cap and trade. There's all kinds of different programs throughout the world that are popping up. That will have a positive impact on us. But even without those, many companies, because of the ESG, the demand of investors for ESG policies, and many large multinational consumer goods companies all have very aggressive targets to reduce carbon emissions. So even without the government's assistance, they have their own targets that they are reporting to their shareholders, and they need to deliver on. So we're seeing a lot of growth that way. Okay, let's see. Insider ownership. It's a good question. It's a common question. It's about 9% right now, and the reason that isn't any higher is because the company has been around for a long time. I mean, Thermal Energy was founded back in 1991 by the inventor of the Fluase technology. The first sort of 15 years of growth. The first 15 years of the company's history, it operated largely as an R&D company, so very minimal revenue, big losses. I joined the company in 2007. I found out about it then. and I really liked the technology they had and the opportunity, so I joined the board, invested in a bunch of stock. We then acquired the GEM business in the UK in 2008, and I took over in 2009 as CEO. At the time, the company was still losing about $3 million, and at that time, as a result of the acquisition of GEM, they had about $4 million in revenue. We've grown it from that point to, the results I showed you, sort of $25 million in revenue and almost $2 million in profit with our own cash flow, without access to capital markets, which means all the original founders of these companies are gone. So the 9% insider ownership, the 9 to 10% insider ownership, has all essentially been purchased on the open market. So, our shareholder base is widespread. The single largest shareholder is a retail investor. He's been with us more than 10 years, and he, he owns about 7%. I am probably the second largest shareholder. And I said, overwhelmingly, the majority of the stock that I own about 6 million shares, I have purchased on the open market over the years. So it's about 8%, bottom line, it's about 8%, but like I said, almost all of that has been purchased on the open market. So wanted somebody, let's see here. Technology. So our big heat recovery, our big turnkey solutions are heat recovery. So we basically take anywhere where there's hot air being exhausted to the atmosphere, we take that hot air and we use it to heat hot water, and we give the customer the energy back in the form of hot water. Often that source of heat is a boiler exhaust, a natural gas-fired boiler exhaust. Believe it or not, the steam era is more than 200 years old, but on an industrial site, overwhelmingly steam is still used on almost every industrial site because it's a very efficient way to distribute energy throughout a facility. You can either do it with hot water or you have to deliver heat somewhere, you can do it with hot water or steam. Steam is 1,000 times less dense than hot water, so steam is still a very efficient way to use it. So we take that hot air, often from a boiler, but it could be a dryer, it could be any other hot air stream, and we use it to heat hot water. But what we found was most of our customers were using steam. And so the GEM technology was a sort of a revolutionary new steam trap. So if you think about a steam system, you're boiling water into steam, then the steam circulates throughout the facility to be used for process or heating. And as it circulates, it cools down. As it cools down, it condenses back into water. So every steam system out there since the steam era began has had something every so often to drain off the condensate. You can't let that condensate build up because pressure can build, it can explode, but it also affects the efficiency. So you have something called a steam trap, which is designed to trap the steam in the system but allow the condensate to drain out. So every steam system out there has all these steam traps. A small commercial laundry might have 10 steam traps. A big petrochemical facility could have 20,000 steam traps. All the traditional traps are based on a valve that opens and closes, sort of like a float valve in the back of your toilet. So when the condensate is there, the valve opens, the condensate drains out, the valve closes again. The problem with that is, number one, they fail because they're opening and closing. So they fail at about 20% a year. So a fifth of them fail every year. So you got a site with 10,000 traps, that means, 2,000 of them are failing every year. The second problem is they're designed to fail open. So if they fail, they're wide open, they're releasing live steam. The GEM trap that we acquired back in 2008 has no moving parts. It's a Venturi orifice trap, has no moving parts. So first of all, it never fails. And second of all, it's 15% more efficient than traditional steam traps. So once they install the GEM traps, they never have to buy another trap. And then more recently, we acquired the heat recovery technology from boiler room equipment in the U.S. The FluAce is what they call a direct contact heat recovery system. It's very good. When I say direct contact, that means the hot air is coming in direct contact with the water we're heating. A direct contact system like the FluAce is very good at extracting every last little bit of energy out of that heat stream, but it's a little bit more expensive. The heat sponge and the sidekick are very good at extracting a little bit of energy out of a hot air stream very inexpensively. So depending on how much energy the customer needs, depending on what the customer's paybacks, we can extract as much or as little energy as they want, and that's why the heat sponge is a very good addition to our business. Not sure if I have any more time. Let's see for questions. All good questions. You know, look, this is probably a good question to end on. What will TMG look like in 5 years if it's successful? You know, it's more of the same. We want to continue to grow organically. We want to continue to expand our global footprint, primarily in Europe, and we want to do a couple of acquisitions. We did do a pretty widespread search of the market back in 2018 when we acquired Boiler Room. What we realized was, you know, companies that were out there that we knew of that had complementary technologies, they were sort of our size or smaller. They weren't bigger than us, and they generally didn't have their own sales force like we do. So there's lots of opportunity to add more technologies to our portfolio. So it'll continue growing at 30% plus compounded annually, plus you know, add in some acquisitions. And then one final question here, try and get through all of them. Can you provide us a description of potential client activity, anticipate COVID restrictions being eased? Listen, we're already seeing the order intake increase. So the order intake, I think, is 87% up this year compared to last year. Admittedly, last year was you know, not a great year for order intake because the global pandemic started to impact us much before the actual pandemic was declared in March. But having said that, the year before was a record year for order intake. The year before is what drove us to the $25 million in revenue. And the year before, we had $14 million in orders received at this point. Right now, we have 13. So we're well on our way getting back to that pre-COVID level of performance. But you're quite right. Once we get the order, we can't always execute it until travel restrictions are fully lifted. And that is really dependent on the country we're in as well. You know, the UK is basically getting back to normal. The US is basically getting back to normal because they are much further ahead than some of the other countries, Canada included, Germany included, with their vaccination program. And that's really what's driving it. But the good news is everybody's getting there eventually. So you know, we will be excited to open up again when we can open our offices. We've been operating entirely remotely, you know, for over a year now. So we'll be glad to get back to our offices. And I think that's probably about it. That's all the questions, and it's 10:58. So I think we have to say goodbye. Listen, if you reach out to me if you have any further questions. Our website is www.thermalenergy.com. I would welcome to hear from you, and thanks again for your attention.